Dubai Entrepreneurs Podcast.
All eyes are on Dubai right now. The real estate market plays a huge role out here. In the past 5 years alone, the market's up by about 80%. Obviously, people are really interested in things out here. Let's talk over some mistakes that investors are making when investing in Dubai real estate.
So yeah, there's a lot of different mistakes that people can make when they're investing into the Dubai market. Now, first things first, I think that we should talk about, being misinformed from a real estate agent themselves, because I think that's a very important thing to talk about.
Yeah.
A lot of people don't realize that to become a real estate agent in Dubai, you don't need any qualifications.
That's crazy.
You could come into being a real estate tomorrow and start advising people on where to invest their money into the property market. And we're not talking about, little investments. It's a lot of money to a lot of people. These are multi-million-pound deals in a lot of cases.
Yeah.
And
anyone can just come over to Dubai and start selling property.
Anyone.
Do you think that will change in the coming years? Do you think they'll apply some sort of legislations that stop that? Because that's quite worrying.
Yeah, of course. I think that's something that the DLD are trying to do. So obviously the DLD is the Dubai Land Department. They're trying to make it stricter. Obviously, you've already got the RERA license that you need to have, but it's a very basic exam, and a lot of agents actually aren't registered in that case.
Yeah.
And, it's different for, an investment advisor in the real estate market compared to somebody that's, listing houses and selling them for families that are moving to Dubai. It's a completely different job. Real estate advising on investments is different to somebody that's going to, help you sell your property and work with a seller, if that makes sense.
Yeah.
So that's something that you need to consider first of all, is choosing somebody that's knowledgeable about the market, making sure that they know where to invest your money.
Yeah.
And that's one of the key mistakes that people make, is being misinformed in the first place.
So how do people go about finding a reliable source?
Yeah, so I think you've got to do your due diligence as an investor. I think you've got to look, maybe online now is a good way to look at. YouTube is, you find credible agents that way. People that you can see are knowledgeable about the market. They've been in the market for some time, and that they actually understand where to invest your money, right? Yeah. You don't want to be looking at, just on Property Finder at listings, because then again, you'll find agents that are working in a different way. They're not investment advisors. They're looking to work with sellers and help them sell their home. So they're not necessarily on the buyer's side. They're helping the seller get the maximum price for their property.
Yeah.
So looking online is a good way. Even coming to Dubai, networking in person, having a look around, it can be a tough challenge, but online is the best way that I would say through, social media platforms right now, but making sure that you choose an agent that's knowledgeable about the market.
Yeah. And it's interesting you say that, because that's actually how we met.
Exactly.
So I found one of your videos on YouTube. I came over to Dubai on holiday. We went for a coffee. I think it was in the marina. I obviously sussed you out, saw that you were a very reliable agent, and we done the deal. So
exactly.
So let's talk about some more mistakes that investors make when investing in real estate out here in Dubai. And I think typically there's two categories for wanting to buy a property. There's wanting to buy a property for investment purposes, and of course renting it out to a tenant. And then there's of course buying a property for you to live in residentially. And I think the strategy, or the way that you look at a deal, differs between the two ways. So for myself, obviously I wanted to buy a property for investment purposes, to rent it out to a tenant and have cash flow coming in on a monthly basis. So when you're looking at that kind of strategy, you want to look at things purely from a fundamental basis. You want to make sure that the numbers are right, and you want to avoid getting emotional.
So real estate, obviously you've got to take the emotion out of it, especially when you're investing, right? Because if you're investing, like you say, for rental yield, obviously it's got to appeal to the end user, the tenant that you're going to be renting it out to. But you don't want to get attached to it yourself. You want to look for the things that are going to appeal to the end user, of course, but you've got to look at the numbers. The numbers are the most important thing when making an investment.
So obviously the property price is the biggest thing to take into consideration when buying a property, but there are other small little costs that you definitely do need to take into consideration. Now, if you're buying a ready unit, you need to think about the 2% broker fee that you need to pay. Whereas if you're buying off plan, you need to think about the 4% DOD that you need to pay. Let's talk a bit about both of them and what that means for an investor.
Yeah, so in the secondary market, when you're buying a ready property, you'll be paying the 2% brokerage fee and the 4% DLD. So you're around 6% over what your cost is already. That's something that people don't calculate, right? Then when you look at the off plan market, obviously you're on a payment plan, it's interest free. You're looking at a 20% down payment, it's standard. Plus then you have to pay your 4% DLD and your admin fees, which are about 3,500 dirhams. And then in the secondary market, you have to pay either a mortgage. You can get a mortgage and do. For residents, you can get an 80% loan to value. For non-residents, you can get up to a 60% loan to value. But you have to do your 4% DLD and your 2% brokerage fee at the time of the transfer. And that goes to the DLD, the 4%.
What actually is the DLD? For those who are watching that might actually not know what a DLD means, what is it and why was it set up?
Yeah, so the DLD is basically the Dubai Land Department. It was set up by the government to basically overlook all real estate transactions, anything to do with real estate in Dubai. You go to the DLD for that. So it's the Dubai Land Department. So whether you're renting the property out, whether you're purchasing a property, the DLD will be overlooking that and making sure it's a smooth transaction.
And that occurs for all property purchases out here in Dubai, regardless of if it's off plan or on plan.
Exactly, yeah. So all developers have to register with the DLD. 4% applies to any real estate transaction that happens in Dubai. That's purchasing a property, not renting the property. And that's paid by the buyer in the off-plan case, or in the secondary market, it can be split between the buyer and the seller. It depends on obviously the agreement that's put between the buyer and the seller.
Before the DLD was set up, what was happening? Were developers running off with investors' money? Because there was no real protection for investors, was there?
Yeah, so, about 15 to 20 years ago, there was no sort of protection in that sense. There was no escrow accounts, right? So now when you purchase an off-plan property, all the developers have to be registered with the DLD and they have to open an escrow account. So the escrow account is controlled by the DLD, it's backed by the government. And the developer can't access any of the money that's in this escrow account until certain stages of the project has been complete. Therefore, it incentivizes the developer, obviously, to build the project because they can't access the funds otherwise. And to initially set up an escrow account as a developer, you have to put 50% of the overall cost of the entire building into this escrow account in the first place. They have to be a cash-rich developer to even set up an escrow account in the first place and, sell an off-plan project to investors in the first place.
Now, another mistake that investors might make is not actually having an exit plan. Obviously, everyone thinks about the initial stage, which is, of course, buying the property, but then you want to plan out the next 5, 10, 15, even 20 years of your investment. For me personally, it's quite simple. I've got a buy and hold strategy, so I don't plan on selling it anytime soon. But of course, there are a whole load of different strategies that an investor can undertake. One of them specifically when buying off plan is buying a unit and then flipping it at handover. Do you work with a lot of investors that take that strategy?
So I think one of the most common, questions I get asked now is, can I still buy a property and flip it? That's one of the biggest, investors reach out to me via social media and they say, I want to buy and flip a property within 12 months. And what I say to them is, it's not like the market used to be years ago where you can buy almost anything and then you can flip the property, 12 months later. It's a lot tougher to make a smart investment in this market than it has been previously. So if you want to flip a property, you've got to be very, very selective now in today's market as to what product you're going to invest into. So when you look at specific areas, for example, it's very dependent on the project itself. Always investing into phase 1 of a master plan. That's always a good strategy if you want to buy and then resell the property, because the developer themselves in a lot of cases will increase the price on each launch.
Funnily enough, that's actually what happened with the project that I bought. I bought the unit and the next phase, they increased the prices by about 5-10%. So it's really important to try get into a project as early as you can, because that's most likely when you're going to get it the cheapest.
Exactly. Flipping in general is a very hard strategy in today's market to achieve. So it's very important that you look at all these different things and, make the right investment. But, from your perspective, obviously I know yours isn't to flip the property. You're looking at more of the rental income, but getting it at a cheaper price is obviously beneficial.
So I think flipping seems to be the talk of the town right now on social media, especially on TikTok. Realistically, like you said, flipping isn't as easy as it once was. We see a lot of people talking about that it's a very easy strategy and you can make a lot of money from it. What are your thoughts on people getting advice, financial advice from social media?
I think, I see a lot of videos that is just, it creates a big hype around certain areas, say for example, certain projects, but realistically, following hype isn't investment strategy, right? You don't want to be looking at, TikTok, Instagram, looking at somebody just showing the amenities of a project and saying this is a good project because it has X, Y, Z. You want to be looking into the fundamentals of why it's a good project, the location, what's going in around it, the infrastructure, the government plans in that area as well. And that's something that I base my investment strategies around, right? I want to be investing where the government themselves are investing, not where the hype is going. For example, there's certain areas right now that are being hyped for a big tourism influx, but there's no real economic background within that area in terms of corporate jobs, families living there and people relocating there is purely based off of a tourism hype. And another thing is that it's more predictable when you're investing next to where the government are investing themselves or where there's already infrastructure, where there's already, working professionals in the area, jobs, office towers and things like that, right? Because we can predict using the existing data, right? We don't want to be investing into a hyped up area or a hyped up project just because of the hype. That's a big problem that I see a lot of people making. And it's another thing where people come through social media and they'll come to me and say, I want to invest in this project because I've seen it on social media, but they don't understand the reason why. And a lot of cases, people will reach out to me about a specific project and we'll have a chat. We'll go through the numbers. I'll send them a report, a full breakdown of the numbers and everything. And we end up going for a completely different project in a completely different area because it makes more sense.
Yeah. And I think that's really important to make sure you go with a really good broker because like you said, anyone can sell them anything. If they come to you saying, I want to buy here, any old idiot will sell them a property there. But I think it's really important to work with a good agent like yourself because then you can at least advise them to say, okay, I understand that you might want to buy this project, but these are the fundamentals. You might be better off purchasing somewhere else.
Exactly. And then everyone benefits in the long run,
Yeah. And in terms of hype around developers, do you think that sways the market?
Yeah. I think that something that people need to be careful about as well is that some developers that do all the fancy marketing with the, big advertising campaigns to an international market that don't understand the Dubai market, they don't understand the previous projects that specific developer's done. These developers that are doing the big marketing campaigns, in a lot of cases, they're not necessarily the best quality developers and they'll be advertising it to an international audience that don't understand the Dubai market so that they can sell the project. Because realistically, people that live in Dubai, people that know the Dubai market, they know not to invest in certain developers, whereas an international audience are a lot easier to sell to. Yeah,
I think that's quite cheeky from developers. I think another thing that developers do is, I'm not saying this is necessarily a bad thing, but it's something that you need to take into consideration is the post-payment plans. That's obviously something that they do to incentivize you to buy into the project. Someone who might not have as much capital up front, they might be interested in that just so that they don't have to necessarily cough up a whole load of money all at one go. But the issue with that is that, they're trying to incentivize you into buying the project.
With a payment plan. And it's like a lot of developers will give a post-handover payment plan, but they'll increase the price by 20, 30% so that it looks more affordable in terms of payments going out each month. The tenant can cover a big portion of it. But realistically, the overall price of the property is more expensive. Another thing about post-handover payment plans in a good way is that obviously they're interest-free. Mortgages, if you take a mortgage on the handover payment, some people don't like to do that because obviously against religious beliefs. So in that sense, post-handover payment plans can be very good for certain people. And in a lot of cases, there are good post-handover payment plans. But it's about doing the numbers again. It's not necessarily just investing because it's affordable to you. It's got to be an investment because it's going to give you the best possible returns, not just because it's affordable.
And I completely agree with that. Now, to talk about something that I initially couldn't get my head around at first is the difference between payment plans and post-payment plans. Now, we just went over post-payment plans. Let's talk about payment plans and how that works out here in Dubai.
Yeah, so they're the same thing. Essentially, all that a post-handover payment plan means is that on a standard payment plan, for example, you might have a 50-50 payment plan. You pay 50% during the construction, and then you pay 50% on handover. The only difference with a post-handover payment plan is that 50% on handover goes into a post handover, and you can pay it off after the property's been completed, after you've been given the keys. And then obviously the benefit that comes off of the back of that is that the tenant can then start contributing towards that.
Yeah.
But obviously, again, you've got to remember that a lot of the top developers, they won't give these post handover payment plans because they don't need to, you know.
Because investors they're scrambling to get a property from them anyway. So
exactly. They're going to sell it anyway, so they don't need to, you know, go and give a post handover payment plan. Even, for example, Emaar, one of the most credible developers here in Dubai, they give 80-20 payment plans, even 90-10 payment plans. So it's a very capital intensive. Yeah, exactly. Yeah.
So one of the things I really like about the project that I bought is that it has a 60-40 payment plan. So throughout the construction phase, I put down 60% deposit. And then once the unit's handed over to me and I get the keys, I then pay off the remaining 40%. Now, I don't necessarily need to cough up that 40% all in one go. I can either pay it off in cash if I want to, or if I have the cash to. I'm not sure where I'll be at next year. Or I can mortgage that remaining 40%. Now, let's talk about the mortgage options that investors have, non-residents and residents. How does it work in terms of getting a mortgage as a non-resident out here in the UAE?
So for a non-resident, the maximum loan to value that you can get is 60%, so with a 40% deposit. And then for a resident, the maximum you can get is an 80% loan to value with a 20% deposit. So for a resident as well, on the second mortgage, you have to do 40% down payment, and then you get a 60% loan to value. Only on your first mortgage do you get an 80% loan to value. For a non-resident that's getting a mortgage, it's very simple as well. You just provide bank statements from whichever country that you're living in, and you apply for it through a UAE bank.
Matt, thank you so much for all your expert guidance. If you're looking to invest in Dubai real estate, click the link in the description of this video.